Well, once again, you're still fighting inflation with your capital. And if you're not going to do anything with it, that's when you just start losing it all. But you need to have a plan.
How the markets will be affected. We don't know what's going to happen in a situation where maybe some Class A's or new builds are affected, which did happen over COVID because a lot of those Class A new builds, they had to lower their rates. And it actually affected the Class B people because the Class B people own something for the last 15 years. And now somebody across the street who just built something brand new is charging the same amount as the Class B. And that affected them. So I don't know if that's going to happen in the next cycle. But I can tell you that the Class A will be affected a little bit differently than a Class C. And to have all of that be a part of one portfolio means that you have the higher percentage that whatever happens in the economy, it doesn't have the chance to affect each class of your asset within the portfolio the same.
Yeah, no, those are really good points. And, a lot of people are like, well, is now a good time to invest in real estate? And the answer is always yes, as long as it always is, because if you look at it otherwise, say we don't get to refinance these projects because once again, interest rates keep climbing and it doesn't make sense to refinance. You still have an asset that the equity is being paid down or the equity buildup is there. You're able to obtain cash flow still, and you still own the asset. You're getting all the tax benefits. So it's okay. You just wait, but your money's actively working for you versus just sitting in a savings account or into the open market in the stock market, which honestly, I don't know how it's doing, but my assumption is not well.
Not well. It's projected to go lower. I mean, look, I hate saying that because it depends on who you talk to, but not many people I know are saying I'm flooding the market with my dough right now because it's about to skyrocket. There are people certainly buying, especially some bigger pockets, deeper pockets, because as this continues to go down and down and down, it's a good time to buy. But it's certainly not. What scares me even more is the inflation piece, and I don't even want to get all geeked out on that, but it's mind-blowing to me that your dollar continues to get less and less. Now, if you own a hard asset, even if you're not making cash flow, if the tenant's paying down your loan, if you're getting the tax write-offs, if you're getting some type of appreciation that's just naturally happening, and you're adding value to the property itself, I'm excited to have a financial advisor on here to tell me how that's not. It should be a part of anybody's portfolio, these real estate assets that we're doing.
Yeah, and I still think you should hold on to a lot of cash as much as possible that you feel comfortable with. You want a service in case, you do experience some vacancy, you get some stagnation with rent growth.
You mean within each property?
Within each property, yes.
Definitely.
And also just you personally, because there are going to become some buying opportunities. So although the inflation is really high and your dollar is devaluing, the property should come down in value as well. So technically it starts to get a little bit closer to that threshold. But if you're not going to do anything with either, then your money's just going to lose value.
Have a plan for your money.
That's the thing, because lots of people will want to keep it and say, I'm waiting for this, but then they'll get worried because they're saying the market's crashing. Oh no, that property is going down in value. It's going to continue to go down. Well, once again, you're still fighting inflation with your capital. And if you're not going to do anything with it, then that's when you just start losing it all. But you need to have a plan.